Hi, my name is Michael Waits, and I would like to welcome everybody to a Reuters Events webinar. The best of both, a sweet spot between new and traditional insurance. Today, we are going to talk about striking a balance between digital and traditional distribution channels. And I will say this, during the over 180 recorded conversations that we have done on the Asia InsurTech podcast, I don't think we've had one episode where the concept of digital transformation and digital distribution has not been discussed. We have assembled an amazing panel for today's conversation that includes John Trotter, Asia Head of Digital Partner Distribution at QBE, Hassan Karim, the CEO and President Director at Adira Insurance, and Dominic Rudeau, the Chief Strategy Partnership and Innovation Officer in Asia at Hanover Re. Now, we're going to give some time for each of those participants to introduce themselves in more detail and give their views on striking that balance between digital and traditional distribution channels. And then we want to encourage the audience to be interactive and to place some questions in the Q&A box for those panelists. Let's start with John Trotter.
Thanks, Michael, and good morning or good afternoon, everyone. Not sure where everyone's joining from. I'm John Trotter. As Michael introduced me, I work for QBE looking after digital partnership distribution. You'll probably guess I'm Scottish, so I'll try and keep my speech quite slow for you all today. Just a little bit about my career really and where it's relevant to this discussion. I started my career in the UK working for Lloyds Bank, then moved on to Aegon, a big Dutch insurer and pension company. And then probably the first thing I'll talk a little more in detail about, I moved to Tesco, and I was part of the team that set up a joint venture with Royal Bank of Scotland to try and disrupt financial services in the UK. That subsequently became Tesco Bank when Tesco bought the business out for a valuation of close to 2 billion sterling. So I guess a unicorn I was involved with at the time. But we did a lot of really fun stuff, especially using loyalty data and a lot of digital processes, which at the time weren't being used. And I guess it's probably the first time I really got an insight into how powerful data and digital processes can be, especially when you're trying to break the norm. From there, I moved internationally. So Tesco asked me to set up similar ventures across Central and Eastern Europe to start with, and then subsequently in Asia, which brought me to Hong Kong, where I still live. And since then, I've done business development type roles, so mergers, acquisitions, strategic partnerships, ecosystem development for AXA, Sun Life, and now QBE. My passions in business, I guess, are innovation, collaboration, and emerging customers, for want of a better term. So trying to bridge that protection and non-banked, and especially in Asia. And I think where this discussion is really relevant for me is everything new that I set up, and typically in a BD role, everything's new, so it's competing with what's traditional. So this is very close to my heart, and pretty much everything that I set up has to have one eye on whether we're cannibalizing this in business, how we're integrating with the existing business, not putting our nose out of joint, making sure that we're actually supplementing rather than going against the business. So, you know, hopefully I've got some insights to add here. I know you're all going to ask very easy questions of us. So that's me. Hopefully that's okay, Michael.
That is great. Thank you so much for that. Hassan Karim, you're up next.
Hi, everyone. Hassan Karim. I'm the President, Director and CEO of Adira Insurance, which is part of the Zurich Insurance Group. Similar to John, I actually started my career in the UK. So I'm a Brit by nationality, but I've been in Indonesia for 5 years. Before that, Hong Kong as well, and have worked across retail and global markets business. Digital is an area that's really a passion area for me. I think it's the future, and we'll talk more about what that means and how much of digital is hype and how much is tangible development. But it's something that we're seeing a lot of, particularly in my market in Indonesia and across Southeast Asia, where we've got very low penetration rates of insurance, typically, you know, a few percentage points, huge populations, and populations that are not familiar with insurance and are looking for new ways to interact. I think digital presents fantastic opportunities through non-traditional distribution channels. leveraging the brands and ecosystems of third parties that maybe have a better brand affinity with customers and bring more people to the insurance market. But I think, it's also about enabling traditional distribution as well. So it's not about just replacing traditional distribution with digital front end. It's around how you use digital to enable and empower traditional agency channels, for example, broker distribution, as well as direct-to-consumer and partnership offerings. The other area that kind of really excites me is one of looking at how digital can make insurance more tangible and relevant. I think, the pandemic has led to a lot of digitization, or a lot of talk about digitization, and Michael and I have had this conversation before. But a lot of that digitization is just taking existing processes and putting it online. And to me, that's not digital, right? That's just sticking a Band-Aid on on a wound. It's not really solving any pain points. For me, digital transformation is much more interesting when you get back to what are the core customer needs and customer outcomes that you're looking to address, and how do you redesign what we do in insurance to really cater for that customer need, whether that's through traditional distribution or new distribution partners.
That is super. Thank you very much for that. Dominic Rudeau, would you like to go next?
Sure, thank you, Michael. Yes, 20 years of insurance experience between AIG, Chubb, and insurtech startups, mostly in Asia. At Hanover, I do two jobs. One is to look after the P&Ls for consumer lines, and the other one is to innovate. So I agree with what we have discussed so far around what it is to be digital and how to engage the consumer nowadays. And that got us as a reinsurance company to become maybe something a bit more. So we are, of course, a reinsurance company, but we are also a reassurer. By that, I mean, we do help, we reassure, we support our insurance partners in their customer-centric change management and innovation journey. And to do that better, to fit with a user-centric ethos, we became ethnographers. And I say that because I got a degree in anthropology to make sure I knew what I was doing. And then to make it all happen, we partner with insurtech startups. We have launched 22 innovations over the past 11 months with as many partners across our 5 ecosystems. So that's how we can make sure that we bring this digital transformation to everyone and making sure it's relevant for the end user.
Yeah, I mean, every time I talk to you, I get more and more fascinated. So that's a great introduction. I want to start with a question of my own first, and maybe John, we'll start with you and then move to Hassan. It's my feeling that, and I think Hassan said this as well, it's my feeling that agents, like a lot of people talk, when they talk about digital distribution, there's this hint that agents will go away and that everything will be digital. And I think it's a head fake. I think agents will remain vital to the distribution process. And I think that they will go through their own digital distribution and digital transformation as well. How, from your perspective, how do we enable agents to get properly integrated into these digital distribution channels? And what has to happen for them? And in particular, people that have been in the business, let's say for a long time, and may not be as tech savvy as maybe some of their new colleagues.
Yeah, thanks, Michael. It's a great question, actually, and one that comes up really very regularly in business. So I think the introductions were very astute. There's lots of companies, certainly in Asia, talking about digital transformation, and they're not transforming anything. They're taking a paper application and put it on an iPad. That's not to say that's not useful for the customer that the agent's sitting with, but it's not really transforming. Yeah, I think there's a couple of parts to your question, if I can address them in turn. So I wholeheartedly agree with you that agents are super important, especially in Asia, to distributing insurance. Even the simple insurance that doesn't need advice, a lot of consumers in Asia need their hand held through an application. Way things are. There's probably a bigger reason that agency is really important, and it's because agents are actually very, very good at their jobs. They make it super easy for customers. So when we talk about digitizing processes, always there's conversations around making it really easy, making it where the customer wants and when, making it super convenient, helping them through the process. Agents do all of that, and they do it very, very well. You want to buy car insurance in Asia, the agent will fill out the forms, come to your home, collect your check. You know, it's super, super easy. So it's actually very difficult to beat that process through digitization. And I don't think companies should try and do that. I think digital should be a complementary channel, and that we should be there online for those consumers that want to buy that product that way. But I don't think it's ever a replacement. I think the companies that go down one route or the other are probably leaving money on the table because they're ignoring certain customer preferences. How do we make it easy? I mean, that's not a super easy answer. I have known some companies in Asia that will partner with, say, a computer gaming company with a specific reason to try and recruit new agents that are of millennial and Gen Z generation, because they can relate to the customers that they're going after. Beyond that, it's training, it's being patient, but I think as much as anything else, practically, it's allowing agents to be good at what they're good at. And if they can bring in business doing things the way that they've always done, I don't think we should force necessarily new processes on them too. So I've sat on the fence a little bit with that one, but I honestly think that both channels are important, and maybe the importance of each will change over time, but I don't think we can ignore one or the other at the moment.
Yeah, I mean, I want to give an equivalency to people that are listening to this. So I come out of a sales and trading background, most recently in an equity business. And one of the things that we built was, we called it a smart sales trader. And what it was not meant to do was to replace the relationship between the salesperson and the client. What it was meant to do was superpower that sales trader so that the good sales traders ended up being brilliant, because they had all this information and all of the processes automated, but a bunch of information at their fingertips, so that they could then have a conversation with their client about the products that they wanted to either buy or sell. So I think this is the similar thing that's happening actually in the insurance industry, in that these agents will be superpowered, and that the more information they have, like you said, they're already great at their jobs, and now they'll be even better, but they will not be replaced. Hassan, I'm wondering if you can talk a little bit about this hybrid model as well, and also about the internal training that's necessary for people that have been in the industry for, let's say, 15 or 20 years. And it may push back a little bit, at least initially, but then once they realize how much more productive it makes them, they'll say, oh, I invented this. Like, that's how comfortable they'll feel with it, right?
And Michael, I think you hit the nail on the head. It's really around, digital for agency, and I think agency is here to stay. It will probably go through some augmentation. And that's really where I see the role of technology. It's augmenting as opposed to replacing. And I think that's quite important, because what digital should do is make things easier. So in order to digitize the agency channel, it's really looking at what are the pain points, right? How do you make your agents more productive to generate more income for themselves and provide a better service back to customers? So, there's hundreds of different technology platforms out there that all claim they can do that, and some more successfully than others. But I think really it's a partnership between the carriers, those tech providers, and the agency leaders to say, what is the problem we're trying to solve? And if there's not a problem we're trying to solve, why are we trying to digitize it? So, some of the best things I've seen, or some of the visions that I've got for my organization around digital for agency, we looked at digital apps. We looked at making an agency super app. And when we spoke to agents and we said, look, is this really what you want? Do you want us to make everything online? And they said, no, it doesn't work for us. It's not what we're looking for. And then when we started asking, what is it that really, causes you difficulty? What could make your life easier? It's really around, well, look, documentation. Getting documentation is difficult. We've got to take photocopies. We've got to get wet signatures. Can we make that digital? Could we do digital KYCs, for example? Can we do automatic checking and clearing and sanctions checking, so we speed up the process? And that is really valuable. We've also looked, and we've done something recently here where we enabled payment through a large e-commerce provider. Why? Because if you look at the unbanked population of Indonesia, it's over 50%. So a lot of the customers potentially don't have bank accounts, don't have credit cards, but have digital wallets, or they have access to e-commerce platforms. So by doing that, we've taken away one of those barriers. The other aspect where I'd like to go with this is to say, well, look, as we build more and more customer data analytics, and that's something we're investing heavily in, trying to create single customer views and understand customer behavior. can we start pushing leads to agents who have an expertise in a particular area? So if you have within a postcode of, I don't know, 1220 Jakarta, an expertise in selling travel or motor, and you have a customer that comes to us direct and says, I'm interested in purchasing this kind of cover, we can push it out there. And we can arrange through digital means that introduction to that customer and be able to track, were we able to get that agent to that lead in the right time? What were the challenges that came up? How quickly did it take us to get our documentation out so we can improve our back-end service? But you're right, this all comes down to training. And those platforms work for some people, they don't work for everybody. But for those that want to embrace that, I think there's a huge potential to improve both their business and grow their business and our own business as a result of that. But the training becomes key.
I want to get back to, because I really want to start talking about some alternative forms of distribution, and you brought up some great examples, and I want to dig a little bit deeper. But first, I want to go to Dominic. And Dominic, I want you to, and there's a question from the audience, I'll get to that in a second, but I want you to talk about the mindset change that needs to occur across not just your organization, but your partner organizations as well, and the startups with whom you work to change their minds so that they can then participate in these alternative forms of distribution.
That's a long journey.
Yeah.
But it doesn't have to be painful. We can make it easier. So yes, indeed, you're right. When we talk about digital transformation, we tend to focus and zoom in right away into the tech. Yes, for sure, it's important. We need to be able to sell online, but what do we sell online? And then we also need to change our ways within companies. So if we can enable to buy something in 1 minute and claim in 1 minute, well, we need to make sure we have the back office that is ready to do that. And so it's about catching up with what the tech enables to do. And it's about catching up with different ways of articulating value for the end user. And some are quicker than others. We tend to maybe focus a bit more on the pioneers because they demand that from us so we can deliver it to them first. For the others, there's a lot of time that needs to be spent explaining. So I think for me, the point here, how do we do that, is we don't sell anything. We consult. So we're really pretty much in consultative selling mode. The idea is to say, we're going to check for you and with you if the solution we have is making sense for the way you work today, the pain points you have identified, and so how can we solve it with the solution we provide. And so you don't have to make a decision. We're going to interview different people at every level in your company. We're going to check your current processes. We're going to ask you what are your pain points today, and then we're going to put in front of that what we've done with our solutions that may be able to answer those different points. And then we can, at the end of this 1 week, maybe immersion, we can be able to say with confidence that it seems to be making sense for you to have this solution. So that's how we get them to embrace a solution. It becomes theirs because it is their pain points. We have brought solutions to their pain points. We have agreed it was useful. It's not us selling anything. So I think that's an important point, is to go over the denial, defensiveness, and minimization, is to just say, it's not ours, we don't sell anything. It's yours if you want to, and let's help you define if it makes sense for your use case.
Yeah, and one of the best things I like about talking to you and getting these answers that are themselves pretty innovative is that it's a non-dogmatic approach to problem solving. In other words, it's not just like, here are the top 5 things you have to do and go do it. It's not like that. It's let's work on this thing together in a consultative way and figure out in a non-dogmatic way that may be different for you than it is for startup A or B. And let's work on those things together. So it's a great answer. John, I want to come back to you for a second for a question from the audience. And this is actually really interesting to me, and I'm going to add something to this question as well. It says, to improve insurance penetration and consumer confidence in Asia, do the panelists think, 1, that retail distribution review model can help agents and financial advisors? 2, that simplification of policy and products, so just product simplification? And I'll add the final thing in. What role does GDP per capita play in the penetration of insurance, which is a complex financial product, in the daily lives of people in Southeast Asia? Is that clear? I can repeat it all for you as well. I know there are a few things there, but you understand, yeah?
Could you repeat the first point? I caught everything else.
It's okay. So the retail distribution review model can help both agents, advisors, financial advisors, and customers. More importantly, simplification of policies. And then the last thing is, what role, for me at least, does just GDP per capita growth? Is there a tipping point where people say, oh, wait a second, I've now earned this much money, I think I need to have insurance and other financial products?
Yeah, wow. So I'm not sure I can answer all of those intuitively,
Neither can I.
Michael, but let me have a stab from my experience in this space. So I think if we start with products, because I think that's a really, really important place to start. So your second point there, I think there's lots of insurers take what they sell in an offline environment, try and digitize them and push them to customers with no change at all. And then they're very surprised when it doesn't work. And the reality is that they've, I guess, been a little bit lazy or a little bit naive in doing that. When they developed the products to start with, they probably started with a target customer, asked these guys what they wanted, understood what the pain points were, and tried to solve those. And that's exactly the process that you have to go through when you're selling business online. You have to understand who your target customers are, what their pain points are. They may be the same as offline, but they may not be, and redesign your product specifically for the channel. So I think that's a really good point, that product development is crucial in this space, in my view. In terms of the GDP per capita, I mean, that's a hugely interesting one. And as economies emerge, for want of a better term, insurance penetration does grow. There's no doubt about that. And, you know, you could argue that that's a cause or effect, right? You could argue, is it because people now have more disposable income, that they're more aware of protecting the belongings and the people that they care for? Or it could be that insurers see more of a bottom line, and they start to actively push to these new consumer segments. So I think there's probably an element of both. I mean, I honestly think that insurance can be hugely valuable for a lot of the underinsured in Asia. I think there's a lot of people self-insure, for want of a better term, and don't really understand what might be out there to help them. And I think we've all got a big job to do in that space. I don't actually know what the retail distribution review model is. Can you explain to me? And
I'll ask Ashish, who typed this in, what RDR is. And while he's typing that in, because I'm not sure 100% what that means.
Thanks, Ashish.
While he's doing that, it's okay. And while he's doing that, I just want to make the point. So it was introduced to me by a guy named Greg Krasnov, who's building something from Singapore, but for the Philippines. It's a neobank called Tonic. And he mentioned to me this GDP per capita idea that, you know, we can build the best technology and the best products in the world, but if people can't afford to buy them, even microinsurance is great, but until people get, he said, to around $3,500 of GDP per capita, and when they do, their interest in, in financial services, insurance included, explodes, right? And that was very interesting to me. So I like to get the impressions of other people as well. So Ashish is saying that RDR was implemented in the UK in 2012 for life and pension insurance and product distribution, but I'm not clear on what that is. So thank you for that, Ashish. Thank you for that.
Apologies, Ashish. I can't answer that one.
But Hassan, I have a follow-up question for you, because I really want to dig deep into this alternative forms of distribution. And I'm going to name a company just because it's familiar to me, but I was talking to the founders of Bukukas, who first introduced a product for SMEs in Indonesia. And for anybody who's familiar with the Indonesian market, they know that something like 60-something million SMEs, it's about 60% or 70% of the economy, so it's big, that a lot of the economy runs through those businesses, but a lot of them are sort of, I wouldn't say unbanked, but underbanked. By providing them with some accounting software, they've now been able to, have the ability to provide other financial services to them. Where do you think that businesses like that and Tokopedia and Bukalapak fit in to the distribution mechanism for insurance going forward?
I think they're critical. And it goes back to what I said in my introductory comments, which is really around, a lot of people don't understand insurance or don't have contact with insurance, particularly in Indonesia. So when you're trying to get to that 60 million SMEs, it's really one of relevance. Low social awareness of insurance, what it does, where it's trying to protect, is often not understood. And when you try and approach those micro and small, medium-sized enterprises, and you try and talk about insurance, it's kind of hard to sell because it's an intangible. But going through something like a Tokopedia or a digital partner or a well-known ecosystem brings it to life and makes it more relevant, because customers are used to interacting through those platforms. So seeing insurance products or protection products there enables them to say, okay, I kind of get what this is, and I kind of understand how this is going to work for me, as opposed to it being an insurance sale. It's still an insurance sale, but you're tagging your brand to a brand that customers already trust and recognize and interact with daily. And I think there is a key consideration in terms of, for those companies, and most of the MSMEs are transacting through e-commerce platforms, right? Because Indonesia is a huge country, they don't have a distribution network, so therefore this enables that. So enabling insurance into those ecosystems allows us to get more reach, and it allows us to to have that relevancy, right? So somebody who's shipping goods to customers will obviously have a concern about return of products or products getting their logistics covered, and that's easy to explain and bundle within those platforms. Likewise, there's other products that you can incorporate to those SMEs that provide protection to their core business. What happens if your suppliers let you down? How do you cover the invoice financing if you're putting stuff on buy now, pay later, for example? So there's a whole raft of different products that you can push that way.
And you talked as well about leads, right? And generating leads. If you're and particularly in countries in Southeast Asia where insurance penetration is still very low, right? 1%, even less sometimes of GDP. If you're using data and partnering with some of the big platforms, and it's been introduced to me that we're moving away from sort of a conglomerate economy into an ecosystem economy, which I thought was an interesting viewpoint. But if you're interacting with all these other players in the ecosystem and gathering some data, is there a way to use that data then to generate leads? In other words, if you see activity from a similar type of customer who has insurance product A, and then another customer who has the same sort of payment behavior and purchase behavior and sort of lifestyle behavior, what is the propensity for that lead actually then for you to use the data to find that lead and then turn that into a new client?
Yeah, and I think that's the utopia. Building contextual marketing approaches based on data. So, if you can get to a position where you understand people's buying habits, you understand their motivations and what's important to them, and you can offer them the right product, service, proposition at the right time in the right way through an ecosystem partner, then that's kind of the holy grail of customer centricity, right? Because you get the relevance, you get the the right timing. And data does allow for that, but there's a lot of stuff that needs to go into the back end around building algorithms, AI to support that. And the big question is, will the insurance market make the investments needed to make that happen, or are we going to kind of almost kill the digital initiative by trying to do what we've always done, which is lead comes in, let's send a quotation. And hope it bites. So, the direct mail model. And kind of linked to that and linked to the question you asked, John, I think simplicity here is the key, right? Because if you're trying to sell something to somebody who doesn't particularly buy insurance, you've got to make it relevant. And I'll give you a great example. I was talking to somebody the other day about mobile phone insurance, and it was just somebody on the street. And I said, what's important to you on my mobile phone? I said, right, great. Would you like to buy insurance for that? Oh, no, insurance isn't for me. It's only for rich people. Okay, so what happens if you break your phone? I have to go and replace it or replace the screen. How much does that cost? Oh, it costs me, I don't know, 100,000 rupiah or a million rupiah for a phone.
Right.
Okay, so how much of your income does that equate to? Well, it's X%. Okay, so if I could offer you something where if your phone gets damaged, I give you some money to go and replace it, or I give you a new phone, does that sound like a great idea? Oh yeah. But the minute I call it insurance, not interested. Right. And then I go a step further and say, well, okay, well, look, if I charge you this amount of money for that, how does that sound? Oh, I can't do that because it's too expensive. So then if I could change that and say, okay, well, if I allowed you to pay daily this amount per day, Would that be something of interest? Yes. And then you say, okay, well, that whole concept is insurance. All we've changed is the way that you pay and what we call it. But it's the relevancy. And if you then make it simple and you take away all the legalese of policy wordings of notwithstanding section 6.6 of Article 5, the insured, people don't understand that, right? So if you get back to you will do this, we will do that, and you can make it simple, we'll increase the penetration rate.
I love product development in real time. It's so great. Dominic, I want to come back to you for a second and talk to you as well about contextual insurance and also parametric and embedded insurance, and just get your opinions on how those fit into these new distribution models and how those are affected at scale.
Sure, that makes sense. But maybe I would like to bounce back on what Hassan was saying about this real life experience in the streets of Indonesia. I spent some time in Myanmar myself, and I was looking at how people behave, the way they do, see where the anthropology kicks in. And I noticed that they would buy birds that would be in cage to freeze them. So give money to the birder that keeps the bird in cage so they can be free. The bird is trying to come back in the evening, so it can be freed again the morning after for the coin. And the same, they would buy for grains to be given to birds, or they would put some wooden support against the banyan tree so it stays supported on the branch, don't put too low on the ground. And so why do people do that? They do that to attract good karma, good actions called back for good consequences for people. So that sounds to me just like insurance. You do something for your future to make sure your future is looking better than what it could be. And so we may not have to call that insurance. We only have to make sure people understand the concept. The concept is about helping yourself and helping others. We pull the insurance premium so we can pay claims for just the same thing.
Right.
And so now to go back into embedded insurance and parametrics. If we go back to what is the point of digital transformation, is to be more user-centric, is to be more relevant, is to be more efficient. So it's win-win for everyone. Win for the insured, he gets something they really want, like, and can use every day. And a win for the insurance company because they sell something more relevant, so the top line is growing, and eventually it costs them less to deal with. That's the efficiency part. So parametrics comes in at that moment in time. Nobody wants to go through the hassle of doing paperwork because I have a claim. I'd rather not even claim, it's just I don't have time for the paperwork. Yeah. What a good service if my claim can be paid right away, I have nothing to do. And even better if that comes with services. So it's not just insurance that I get, but I also get the service that I need right now. So let's go back to the anthropological use case. If my flight is being disrupted, my flight is canceled, what do I have to do? I have to queue for 2 hours with another 400 people at the desk of the airline. If I have a proper index solution, they know my flight is disrupted. They tell me, don't worry, we're going to fix it. You don't have to queue. We are calling you, we send you an SMS to tell you we know. We call you back within 15 minutes to tell you what do you want to have now? Do you want to have access to the lounge? Do you want to have the next seat on the next plane? Or do you want to have an overnight stay at the airport? We can fix all of that for you based on the disponibilities and when the next flight is available. So we fix your problem right now. That's more valuable than insurance. Because right now, my problem is, what do I do?
Right.
We fix it for you. And then the claims, don't worry. We know it has been disrupted. You have no paper to be done. We will pay right away. And we do that as much as we can. We also do it for internet outages. Outages happen all the time. I have to say, though, that here in Asia, I have a better experience than I used to have in the UK or in the US. So the infrastructure seems to be better. But if you go on Google, you type internet outage, you will see that it happens all the time.
All the time.
All the time. And you can see people being upset on blogs and things and say, what about this, what about that? I pay for my contract 24 hours, 7, and I don't get that delivered. And so that can be an index as well. Because we have the data, we can be able to say, we know your experience has been disrupted. We can give you an indemnity for that. So the point is not so much to sell insurance, but to craft experiences. So people get something out of it every day and makes their life better. So the best would be to ensure we have a good Wi-Fi, but we may not be able to do that at that moment in time, but at least you get respected for the contract you signed, you didn't get delivered for.
Yeah, I mean, the idea of parametric insurance making automated payouts is I think, very important and is key, I think, to what I'll call which I'll call para indemnity insurance, right? At some point, one of the beauties of parametric insurance is that it has a fixed payout. You know what it's going to be. Even before anything gets settled, it just happens. A trigger gets hit, it's verified third party, you get a payment. Now, there may be some haggling afterwards about, well, maybe it's not enough, but at least you get that to get going, right? And
That's
I can
what you signed
corroborate.
for.
Yeah.
You know
yeah,
exactly what you paid for. So that's
right.
clear.
And there's no argument about it, right? So there's no claims process per se. It just, a trigger gets hit, it's verified, it's done. You receive a payment. And this is sort of the frictionless and seamless way to do that. And when it comes to internet outages, right? I mean, I sit in something called True Digital Park. And I agree with you. I think I definitely have way better Wi-Fi service and internet connectivity than most people in the world. I have 300-400 megabits up and down on a daily basis. But it does go down. And sometimes it goes down for 2 or 3 hours at a time. And when it does, if you're running a business with that and your business depends on it, that can be an important insurance product for sure. Anyway, John, I wanted to come back to you and go back to something that Hassan was talking about. And I think you mentioned this as well. And it's like it's the platformification and using alternative forms of distribution, meaning other platforms and other ecosystems like e-commerce or even, even ride hailing. So a product that everybody's familiar with is called AppleCare. And I don't think most people actually think about it as if it's an insurance product, but Hassan was very clear that it is. And we all know it is. But there's not AppleCare for every other product in the world, right? And this gets back to embedded. It's not so much of a parametric product, it's an embedded product. Do you, and again, because it goes through these alternative distribution channels like e-commerce companies, how do you see this type of, and there's a company in the United States doing this called Extend. I don't know if you've heard about it, but apparently we've spoken to them and their product is now very popular because it's kind of AppleCare for everything else. But how do you see that playing out, not just in the electronic space, but in every product space now having some type of insurance product associated with it?
I think it's got a huge future in our business. I think it's something that a lot of insurers, especially in Asia, are waking up to. And you see some of the bigger players like Chubb and AXA doing pretty big long-term deals with e-commerce companies. We're actively looking at this space in QBE. I think embedded insurance is definitely one of the huge growth areas or potential growth areas across Asia. And you're absolutely right, it doesn't have to be for a gadget or a product, which is fairly well established now. It can be for a number of things. So I'll give a couple of examples of things that I've done or seen as I've worked across Asia.
Right.
So in one of my previous companies, we did a partnership with a large telecoms company, actually in Thailand, and we bundled hospital cash and personal accident for the entire family with the SIM card. So when you bought a SIM card and you renewed with the same company rather than flipping around between players, your PA would continue free of charge. So it became a retention tool for the partner, and it became a really nice kind of a nice protection for the customer. And we actually structured that the telecoms company paid the insurer that I worked for the premium for that, because the value that they were creating from the retention and from the higher ARPU was so valuable. So it's about understanding the pinch points of the partner for embedded insurance and making sure that you're driving value for everyone in that little ecosystem.
Right. Sorry, can I just jump in for a second? It's a really interesting product because in a way it replaces marketing spend. And you talked earlier, I think it was you, about loyalty as well. And it's money well invested for the carrier, because they'll spend that money anyway in trying to either retain the customer or get them to come back or just get a new client. And if they spend it on this product, well, then their marketing budget goes down almost by definition. Anyway, go ahead. I interrupted you.
No, I mean, it's a great point. I'll answer that. I mean, I think you're right. It can be a great marketing favor, but it requires a leap of faith. And I think that's the other point I wanted to make about embedded insurance at the moment, as it's still quite new. There have been some players, as I say, spent a lot of money and done some fairly high profile deals and maybe even paid upfront payments to partners for those deals. But I think it's still unproven, and it's up to all of us in the industry to find the right balance between being intrusive and actually fitting in with a customer journey as they're dealing with the partner. I think embedded insurance has got huge value. You mentioned the ride sharing companies. I think if that's sold in the right way, that's a hugely valuable part of your fare, and it's a very, very small percentage of it as well.
Right.
It's good to know that you're protected in the event of an accident, for example. So I think there's a lot of value that we can add, but we need to be creative and we need to co-create, I guess, with partners in this space to properly embed insurance and get any kind of volume.
Yeah, I mean, that was a conversation that I was having earlier today with somebody in the insurance and insurtech space, and this idea of product co-creation and co-innovation, I think is going to become more and more prevalent. Hassan, I want to come to you and follow up on something that Dominic said, and that was, in a way, you're selling experiences, which is an interesting concept, right? Particularly through these new digital distribution channels. And, you know, customers are used to doing a lot of their lives on their mobile devices, right? So that type of digital distribution is, it's endemic to everything that they do. I mean, I have friends who don't even have computers. They just have a mobile device and they do everything on it. It dumbfounds me, but it is what it is. When you look at that, two things really for you is, how do you define what a great user experience is? And what are the comps? So what are the comparables, right? What are insurance companies looking at now when they're trying to compare a insurance user experience to some other user experience?
Michael, that's a great question and not an easy one to answer. But I would say, in terms of what does a great customer experience look like? It's one that's simple, it's one that's easy, and one that, it's one that naturally fits. We've all used online applications, we've all used apps, and some of them are intuitive and some of them aren't. So, one of the things that we've spent a lot of time doing is looking at customer journey mapping, and not approaching it from insurance, but approaching it from a true customer journey and say, look, it doesn't matter what we're selling. We're starting here and we want to get to this end point, which is the customer is purchasing and then interacting with our product. What are the moments of truth that we need to build out there? And what are the pain points? And if you go through those pain points and you go through each of these steps, what would be a barrier to you? Would it be, as we talked about earlier, enter your credit card detail? Well, great, I haven't got a credit card, so I can't go any further. Right. Would it be, tell us 90 million questions about yourself? Well, for all of us that have filled in online surveys, you get to the first few and then you say, okay, well, I don't want to do this anymore. It's taking too long. So it's one that fits into, the logical progression of a customer's lifestyle. So is it interesting? Is it fun? Is it something that is logical? I use a digital banking app, and something simple, I use it with my right hand because I'm right-handed.
Right.
But all the selection buttons are on the left hand.
Yeah.
So I've got to reach across, and intuitively, I always press the cancel button instead of the select button.
Which must
drive
you crazy.
It's a small thing, but it drives me crazy, and to the extent that I don't use it, and I actually change banks. So really, that's what I would say is probably what defines a good experience, is getting the customer to the outcome that they want to get to in the easiest way, that they come through that experience and say, you know what, that was good, that was better than I expected. And sorry, what was the other part of your question?
So what are the comps, right? In other words, because most people are living a digital life, they are by definition comparing their insurance purchase or just their insurance experience to other experiences that they're having. So as an insurance executive, what other apps or what other businesses are you looking at as comparables that your customers would look at as well, if that makes sense?
Sure, and it's the ones that have the highest user base, in the highest satisfaction scores, to be perfectly honest. And it's market segment agnostic. It doesn't matter. So we'd be looking at e-commerce platforms and how people progress through those. Social media. So what are the things that engage people, and how do you engage people? How do you keep them on the journey? Because there's lots of points where you just want to give up, right? You just don't. This doesn't make sense. I don't like it. And then doing analytics throughout the process. So it's always test and iterate, because even just changing the button, changing the color, changing the position of the question or the logo can have an impact on behavior. And going back to Dominic's point about insurance being you need to be an ethnologist. I think it's true. I think you need to be a behavioral scientist as well, because it's about keeping customers engaged. And I think that's what I would say on the comparable bit. And just to pick up on the point again, you asked John a question around embedded products. I think embedded products, and this is where it links into what you just asked me about the customer journey. It's making it seamless. So if you're trying to embed a product, it's got to be something that is contextual and links to what the customer is purchasing in a way that's easy. And I saw a great one. Unfortunately, it's not my company that's doing this, but cosmetics insurance, allergy insurance for people buying cosmetics online. And I just thought, what a genius solution, right? Because you're buying this thing, you don't know if your skin's going to react. It's a very small amount of premium, but it's a genuine risk. And when we talk about how do we increase the penetration rate in countries like Indonesia, where people don't know insurance, it's a really easy way of getting somebody to understand what insurance is in a really simple way, taking a small bite size of that, and then saying, actually, the same thing applies to your car, right, or your home. So right now you're buying cosmetics, you're worried about the allergy risk, you're purchasing that. But you've also got a risk of driving your vehicle. It could burst into flames, you could have a car crash. We can protect it in the same way, and the same for your home, the same for your business, the same for your life. So I think it's a great way of getting people at first bite.
Yeah, I mean, I look at a fulfilled claim, right, as a trigger for more insurance purposes, and I'll tell you why. Before you make a claim and actually get paid something, you kind of don't understand. This is particularly for people that don't understand the insurance product at the beginning. But once you get a claim, you're like, okay, I figured this out now. It's almost like having a new food for the first time, right? If you've never heard of pizza before, you're definitely not going to order it. Once you've had that first slice of amazing pizza, you think, okay, that's part of my life now. Now that's part of my meal rotation. And I think insurance at some points out here is like that, in the sense that if it hasn't been introduced yet, now that it is, now I got a claim, so I have that great taste in my mouth. I want to have more of this and make it a regular part of my life.
And
Dominic, I want to come back. Go ahead.
Sorry, I was going to say, and going back to your point about the customer journey, for me, it really needs to be end to end, right? I mean, I think insurers haven't quite got there end to end yet. So, being able to do everything you want to do on the same platform and that to be mobile first, going back to your point, is critically important. And that includes claims and getting your claim fulfilled without having to go into another channel.
Yeah, I mean, I'd love to see a situation where you have a parametric insurance policy and some trigger gets hit for something that's happened to you, and it just pops up in your phone and it says, boom, you've just been paid, $300 for that thing that you insured. And then you just go about your day. You're like, wow, that was awesome. Because that's such a great experience. And that's the end-to-end thing you're talking about. I fill it up on my phone. I get paid on my phone. Now I'm in love, right? Yeah. Dominic, I wanted to come back to you. And after talking about great user experiences, talk a little bit about financial inclusion and financial literacy, right? In other words, if we want to increase penetration, which is inclusion, how do we get people literate in a way that's straightforward? How do we engage them to get people financially literate so that they can understand the products better and then add to their ability to be part of this insurance product?
Maybe I would start from not so much the insurance, but services around that, before and after the event.
Go ahead.
Because that's what people are at the end trying to achieve when they rent insurance for a purpose. They rent it to solve a problem. What is the job to get done? And I believe the job to get done is to become resilient, whatever may happen. And so if I buy road assistance or car insurance, road assistance insurance, what I care about, okay, I am on the side of the road, what happens now?
Right.
That's more important right now than anything else. So that's really what I care for. And if I buy health insurance, maybe what I care about is how can I be healthier right now? How can I maybe get into some kind of a good habit? That will make me more resilient. Because insurance, but it doesn't have to be what we talk about. I want to be healthy. That's a problem I want to solve. And that's what I would maybe focus on. Let's talk about the service you can use on a daily basis. If I buy cyber insurance, for instance, yes, we all need cyber insurance, but on a daily basis, what does it mean for me? What about prevention? Well, what about we make sure that your device is safe? And we tell you it is safe because we have measures to tell you what you need to do is to improve your resilience score. And if that's too much, well, give us a call, we'll fix that. We'll do the update for you online. That's relevant every day. So much more than having an insurance that you may claim once every blue moon. So maybe I would start there. What can I use on a daily basis that is valuable for me? And maybe nudge my behavior in a way that makes me more resilient.
And can you just follow on with this? I want to get your opinion just because you're so good at this. What does define a great user experience?
For me, it's what I want, when I want it, the way I want it. No question asked, hassle-free. So it has to be super easy. So I like, for instance, what you can do for some insurance companies, you can click in and out of the insurance. So I want to be insured now. I don't want to be insured now. So you go on your app and you toggle yes or no. You also have some insurance that spot where are you right now in the world based on your GPS. So, you just crossed the border, your insurance kicks in. Right. Because that's travel insurance overseas. So you don't have to tell us it's there on the background. So you don't have to do anything. We also mentioned today about maybe I can pay a portion of the premium right now. So what can I get for that portion of the premium that I can pay today? So things around that. And it's about maybe unbundling, possibly. Instead of having a product with 10 benefits, maybe I just go for one. Because that's the one I need right now.
Right. I like this. What did you say? I want it when I want it, what I want, and how I want it. I guess it was something
what I want it, the way I want it, when I want it, and how I want it.
It sounds like a song from the 70s.
Yeah.
I like it. John, I want to come back to you, and I want to peel back the onion a little bit on internals. And when I was speaking with Rupa Malhotra last week or the week before, who's the head of digital for APAC at Chubb, she noted that in the insurance business that digital now has to be a part of everyone. So we spent a lot of time talking about external facing, digital distribution, new channels. I'm curious what it's like internal. I can ask everybody this, but I wanted to come to you first. What's it like internally, encouraging everybody to facilitate that digital distribution and employ tech across all functions to enable that digital distribution? Does that make sense?
It does. A great question. And it's probably changed over the last 5 years. I think if you'd asked this 5 years ago, my answer would be slightly different. It's certainly a lot easier now. There's definitely an awareness across, I think, every insurer, certainly every insurer I've worked for, that things need to be far more automated, need to be much more digital, much more efficient, to make the customer journey much simpler for them. So I think internally there's an appreciation now that this is important, which is a start. Does everyone necessarily, is everyone on board with the level of work it involves to get there and the journey that we have to go on? I would probably say that varies between companies and between divisions within companies, but I think it's a lot better than it used to be. What else will I say on this? I think there's an appreciation that digital can help now, which is always a great starting point when you're making any change, is to actually sell the benefits of it. So to kind of come back to the webinar topic, I think things like lead generation through partnerships, additional information to aid in the sales process, even more information about at your fingertips about who you're meeting, so you feel like you've got that relationship. All these things are really, really positive for agents in particular, and they take those on much easier than they probably would have 5 years ago. I'll just leave time for the other guys to comment as well, because I think it's a really great question.
Yeah, what I was going to do was go to Hassan and just ask for, because we're running up against time. What an incredible conversation. We're running up against time, but I wanted to go to Hassan and just ask start with you to see if you have any final comments.
Look, I think we're still in the early stages, relatively, of the digital journey. And I think, going back to the topic of this particular webinar, I think we are in a sweet spot, and we should be focused on that sweet spot, which is, not seeing digital as a replacement for what we've already got through traditional distribution, but really around how you use digital to enable and enhance and augment that. And at the same time, digital offers such a huge opportunity, particularly on the data side, to generate customer-centric products that are relevant to customers, which in turn increase penetration rate and provide meaningful services and propositions to those customers.
Fabulous. John, do you want to give a final comment as well? I feel like you already did, but I just want to give you the opportunity to do it in case I miss something.
So just at the risk of being controversial, I'm just going to give a slightly different opinion to Hassan just did. I think insurers are in real danger of missing something really big here. I don't think it's early for the potential partners that we'll collaborate with. The platforms of this world are already digital native. And I think if we believe as an industry this is something that's just starting, I think there's a real danger that we might get left behind. So just a slightly different view of the world. I think in the partnership space, we need to move a lot faster than we have been.
Awesome. Dominic, I want to give you the last word.
Thank you. So maybe I would bring balance between Hassan and John. I would say very often you get the insurtech players pitted against the old-fashioned incumbents. It doesn't have to be that way. We can all work together. Right. So maybe able to go for stack and great. But we work with startups every day at Hanover Re to improve the insurance experience. So that's something for everyone to have a chance to work together.
Okay, that's great. Look, I'd like to thank all of the panelists for today. John Trotter, the Asia head of digital partner distribution at QBE, Hassan Karim, the CEO and president director at Adira Insurance, and Dominic Rudeau, the chief strategy, partnership, and innovation officer in Asia at Hanover Re. I would also like to thank the tireless Lucy Hughes, the conference organizer from the Reuters Events Insurance team, for organizing this. And I'd also like to thank all of the attendees for attending today. Thank you so much for everybody and for giving me the opportunity to host this.